What is a loan modification? How can it save your home? Is your lender helping you? How do lenders respond to an attorney? The secrets are finally revealed. Loan modifications are the altering of the characteristics of the loan without refinancing or in order to prevent foreclosure. In recent years our economy has witnessed the biggest real estate boom in history. Interest rates were at an all-time low, property values were skyrocketing, the economy was thriving and investor guidelines were so loose that anyone, even those who obviously could not afford it, were given loans. Most of these loans were 2, 3 or 5-year interest-only arms with the borrower putting little or no money down and having bad credit. Now that the real estate boom is in the midst of its inevitable correction, many borrowers find themselves in extreme financial distress due to the purchase of the American dream, their own home. There are many different dispositions that are causing millions of Americans sleepless nights in fear of foreclosure. The most common problems that borrowers are facing are adjusting arms and declining values. These are the people that a loan modification program will help stop foreclosure and keep you in your home. The banks are the financial analysts that allowed you to put yourself in this predicament, and the right loan modification will prove it to them. An attorney-based loan modification program will force the bank's loss mitigation department to analyze your situation in order to modify your loan into something that the bank and yourself can agree upon. This might be lowering and freezing your interest for the life of the loan. This might be lowering the balance to the current market value, so that you are not paying on a property that you are way upside down on. This also might include deferring the payments and interest to the backside of the loan, so that you are no longer months behind. No matter what situation you are in, an attorney-based loan modification program can help you tremendously. Are you a homeowner? Are you behind on your mortgage payments? If you would like to know the secrets to successful loan modification help and strategy, please visit our website loanmodificationhelp.blogspot.com. Please request our loan modification strategy book for homeowners. This is a really great way to learn your options and decide if this is right for you, but do not take your bank's offer until you read it. Do not take your bank's modification offer. If you are behind on your mortgage, your bank might call and discuss your situation with you. If they feel that you will be able to make your payments in the future, they are going to offer you a short-term modification solution. Do not take it. Do you really think that your bank is going to offer you something that is designed with your best interest in mind? Of course not. They are going to design a modification so that they can get every penny out of you in the short and long run, while still enabling the homeowner to barely survive. Let's face it, no bank is going to volunteer a balance reduction on a property. They are taking immediate losses and having to report them to upper management. If you owe more than your home is worth, there is a good chance that attorney-based loan modification specialists will be able to force them into lowering your principal balance as well as your interest rate. What most banks and lenders will offer is to defer your past due balance, temporarily reduce your interest rate, and give you a few months off of making payments. That is not enough. You need your interest rate lowered permanently, your terms lengthened, and your principal balance reduced. If they are guilty of predatory lending, which around 80% of loans closed from 2001-2008 are guilty of, the banks are deathly afraid of civil lawsuits. An loan modification attorney will analyze your loan documents and your financial situation. If they find a violation, you will be saving hundreds of thousands of dollars over the life of your loan. Do not take their miniature offer until you have spoken to professionals. An attorney will fight for you against your lender. They knew that the loan that they gave you was going to cripple your financial future when they wrote it. Now let's make them pay, not you. Get our free ebook before you accept any deal from your lender. Loan modification attorneys are trained to find violations of your rights quickly and accurately, minimizing their fees, resulting in drastically reduced overall costs. There is no obligation. Loan modification avenues. There are basically 3 ways you can address your loan modification needs yourself: through a civilian modification service and through an attorney-based service. The differences are simple. Most people contact their bank immediately when they start falling behind and getting notice after notice from the bank. Even though the bank is so quick to try to collect your money, they are very difficult to get in touch with when it comes to your needs. All your cries seem to fall on deaf ears. A small percentage of borrowers have the ability to successfully modify their loan to the best outcome possible. If the bank does decide to help you, it will be very minimal and probably end up causing the same problem to reoccur down the road. The next step is either losing your home or calling a loan modification company. The first type of loan modification strategy is a company that does not include an attorney. These companies are out there offering you the same results that you could get yourself. Without the cloud of an attorney on your side, the loss mitigation department of your lender will bully you around. They are going to help the problem in the short term but not fix it. Their results include lowering and fixing your interest rate for a short period of time and often adding an interest-only option or stretching your amortization to 40 or 50 years. While they will be able to get results better than you could yourself, the benefits they produce are drastically less than what an attorney can get done. Get a loan modification attorney. Attorney-based loan modifications are by far and away the most beneficial to the homeowner. The major difference is that the attorney will find predatory lending violations in your loan documents and threaten a lawsuit if they do not comply with the modification. The attorney will demand a balance reduction if you are upside down, an interest rate reduction, fixing the rate, first payment deferment for a few months, and, if requested, a change in the terms of the loan, that is stretching out the repayment period to further lower the payment. When the attorney finds a violation, that is a fine plus attorney fees. They break down what it is going to cost the bank over the cost of the lawsuit versus our modification proposal. The numbers work so heavily in your favor. Who qualifies for an attorney-based loan modification? There is a very wide variety of homeowners qualify for loan modification. With so many questionable loans being sold over the past few years, homeowners have more causes than ever for foreclosing. First off, you have adjustable rate mortgages, ARMs, where the fixed term is up and the rate increases. The payment now becomes too much to afford. Many of these borrowers used stated income documentation to qualify, meaning that they could not truly qualify for the loan under normal guidelines. Once the rate adjusted upward, homeowners who barely squeaked by in the past now have no chance at making their mortgage payments. Others candidates for attorney-based loan modification are victims of decreasing home values and now have no or negative equity. Property values are dropping at a record pace in many areas, especially those who saw extreme appreciation over the past few years. Many homeowners just see no benefit in trying to pay a huge mortgage payment when they are upside down tens of thousands of dollars and property values are still decreasing. In many cases, the same house down the street is renting for half of the homeowner's current mortgage. These borrowers might be eligible for a note reduction to market value. If you get the right attorney who knows how to handle this situation, you can have your balance reduced substantially, which also lowers the monthly payment. A loan modification specialist can help you stop or avoid foreclosure. A loan modification is an experienced professionals using a plethora of techniques and negotiation skills to make sure that you get best possible outcome with loan modification to avoid foreclosure. Get the free loan modification strategy book at www.loanmodificationhelp.blogspot.com.